Welcome to the Riskwiser Zone, the show where we dive into the world of stocks and finance to help you make informed decisions about your investments. We've got a packed show for you, with plenty of news and analysis to get you up to speed on what's happening in the markets. First off, let's take a look at the big story of the week, developments in the Iran conflict and how they're impacting investor sentiment. The situation remains fluid, but one thing is clear: investors are keeping a close eye on events as they unfold. In addition to geopolitics, we've also got a slew of economic data coming out this week that's sure to be closely watched by market participants. The U.S. jobs report for March is set to be released on Friday, and economists will be poring over the numbers to see if the labor market is showing any signs of weakness. We'll also get a look at private sector hiring in March with the release of the ADP employment data on Wednesday. Retail sales are another area of focus, with the U.S. retail sales report for February set to come out on Wednesday. This will give us a sense of whether shoppers have continued to slow their purchasing pace and what that might mean for the broader economy. And with consumer spending making up about 2/3 of the U.S. economy, this is an important number to watch. We'll also be keeping an eye on earnings reports from some big-name companies, including Nike and Conagra brands. Nike has been working to turn its business around, but its stock price has taken a hit so far this year. Some analysts think the recent decline may signal a low point for the company, with potential upside of 30% or more. Conagra Brands, meanwhile, will be reporting its earnings amidst an 11% decline in its stock price this year. Investors will be watching to see how the company's performance has been impacted by consumer spending trends and other factors. That's just a taste of what we've got in store for you on today's show. Our goal is always to provide you with balanced and unbiased analysis so you can make the best decisions for your investments. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone, folks. We've got a fascinating story to dive into, and it's all about the world of high-stakes investing. You may have heard that billionaire hedge fund manager Bill Ackman has been making waves with his recent comments on social media. He's been touting the potential of mortgage giants Fannie Mae and Freddie Mac, calling them stupidly cheap, and predicting a possible 10x return. And it seems like the market is listening. Shares of both companies soared on Monday, with Fannie Mae up over 35% and Freddie Mac up 33%. Now, we know that Ackman is no stranger to making bold bets, but what's behind his enthusiasm for these two companies? Is it really a case of asymmetric opportunity, as he claims, or are there other factors at play? To get a better understanding, let's take a step back and look at the history of Fannie Mae and Freddie Mac. Both companies have been through significant ups and downs over the years, including a major crash during the 2008 financial crisis. It's also worth noting that Ackman isn't the only high-profile investor weighing in on this topic. Michael Burry, famous for his role in The Big Short, has also been commenting on the housing market and the potential value of Fannie Mae and Freddie Mac. While it's impossible to predict with certainty how these investments will play out, one thing is clear: when influential investors like Ackman and Burry speak up, the market tends to listen. As we consider the potential implications of this story, it's essential to remember that investing always involves risk, and there are no guarantees of success. However, for those willing to take on that risk, the potential rewards can be substantial. So, what does this mean for you, our listeners? Should you be considering Fannie Mae and Freddie Mac as potential additions to your portfolio? Ultimately, that decision will depend on your individual financial goals and risk tolerance. But one thing is certain: the world of high-stakes investing is always full of surprises, and it's essential to stay informed and adapt to changing market conditions. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a look at the latest developments in the global energy market. Oil prices have been surging for the fourth consecutive day, with Brent crude nearing a record monthly gain and U.S. crude futures seeing their strongest increase since 2020. The main driver behind this price hike is the widening Middle East conflict, which has led to supply constraints and concerns over potential disruptions to seaborne energy supplies. The Strait of Hormuz, a critical choke point for global oil trade, has been effectively closed by Iran, pushing Brent futures up 59% so far in March. This has also led to a surge in West Texas Intermediate futures, which are up 58% this month. The situation is further complicated by the targeting of Israel with missiles by Yemen's Iran-aligned Houthi forces, raising concerns over possible disruptions to the Bab el-Mandeb Strait. As the conflict escalates, President Donald Trump has warned that the U.S. would obliterate Iran's energy plants and oil wells if Tehran does not reopen the Strait of Hormuz. Despite ongoing talks between the two sides, the markets remain skeptical about a swift resolution to the crisis. It's essential for investors to keep a close eye on these developments, as they can have significant implications for the global economy and financial markets. As always, we urge our listeners to approach their investment decisions with caution and consider multiple perspectives before making any moves. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.